This is our new topic, controlling. Controlling management control is the systematic activity to set performance standards with planning and objectives. See, basically this is the last, you can say, the activity of the, or you can say the function of the management, where exactly when the management is going to be make a plan, then setting the objective, then the implementation of the plan, the controlling decisions are there and everything, then accordingly management has to keep the control on every, you can say, the activities. They have to check the plans, or you can say the actual implementation of the plan. Accordingly they have to make the comparative, you can say, the statements or comparison between the exactly, you can say, the decided, what exactly they decided and what are the, you can say, the end results. So control is the process that guides activity towards some predetermined, you can say, the goals. Then control is the process through which managers assures that actual activities conform to planned activities. So how exactly they are going to compare with the exact, you can see, the results as per the standard what they have already preset. So now we will see the characteristics of control. Characteristics is this is a, you can see, the end function, and it is a continuous process of the control is over, you can see, the at every, you can see, the level of the organization, from top management to level management. Then employees behavior and anticipating probable, you can say, the changes. So accordingly with the help of control you are able to anticipate the probable changes in the outcomes. Then it is accurate, timely and objective. So definitely control is accurate, timely and, you can say, the objective. So definitely objective is that to check the performance. Then why the control is required, the need of control, why the control is required, proper action, to take the proper action, because always it is, as it is a continuous process, and always you have to check the exact performance with the plan. The proper actions are to be taken. Then decision making is very easy. Okay. Then consistency is there. With the help of, you can say, the control, you are able to make consistent result for your organization. Then proper coordination is also done. Positive impact in the staff, or you can say the workers, with the help of, you can say, the controls. Then detection of weakness and proper implementation of the plan. So definitely control is useful or important for all the above. Then the steps in control process. Now this is the chart. If you are going to look the first, you can say, the step, that is to determine what is to be measured. What is to be measured is the first, you can see, the step. Then establish predetermined standards. Then management has to establish the predetermined standard, that definitely if we have to do some this kind of, you can say, the activities, then the activity should be done in this way. So accordingly they have to set some standards. Then measure the performance of the exact, you can say, the process which is carried by the staff. They measure the performance, and then fourth one is to see that does performance match appraise as per the standard, which the standard set by the management. If it is yes, then activity is going to be stopped. Otherwise again take the corrective actions and again back to the measure performance. The process will be endless up to the performance are as per the standards of the management. So this is what steps in the control process. Now techniques of management control. This is a budgetary control. The first, you can say, the step, that is traditional control techniques, in which budgetary control. So definitely budget is required to carry out, you can say, the any activity in the organization. So and expenses are important. So spending, you can say, the money is more, you can say, the important thing for management or for the company. So budgetary control is important. Then sales budget. So definitely for the sales, the budget is required to do some kind of, you can say, the marketing, or so for, you can say, the promotion, the sales budget is required. Then production budget, then materials budget, labor budget, capital expenditure budget, and fixed and flexible budget. So all these budgets are to be, you can see, the controllable from the manager's side. Then non-budgetary control. In the non-budgetary, you can say, the control personal, you can say, the observation is there. Then statistical data is to be available for the analysis. With the help of that analysis, manager can think about how to control all these activities. Then statistical data, spatial reports, that means back years you can say the report or last 6 months report on which managers are able to make analysis and they are able to control the same. Then operational audit is there, then financial financial statement analysis, then break even analysis. All these are the non budgetary control systems. Then modern techniques of control, there are also modern techniques of control, that means return on investment. The company is able to see the how much exactly amount is to be invested for some project or for some product. So, accordingly how and what are the profit ratio we are getting out of the same. So, that is the return on investment. The second one is responsibility audit. So, definitely responsibilities are going to be calculated of the persons, how exactly he is responsible and what is the accountability. So, responsibility audit is there. Then human resource accounting. So, as per the assignments, how exactly the team was performed or how exactly the work is done. So, accordingly they are going to calculate it by this way, by modern techniques of control.